expect that to continue to be the big thing here. And how fast these markets are moving just shows that algorithms are piling in along with retail traders. Stay tuned for more investigation into options as well on the channel, as we'll be covering that very, very soon in more detail. So let's get through what's going on with the charts. First up, skew. We mentioned that it got crushed the other day, which is certainly unusual. Now, this is one bear reading. Of course, we're looking for more than one bear reading. We're looking for quite a few. So skew got crushed, obviously pushed back up. Not a great sign for markets, certainly something we were looking at. We've also been looking at the S&P 500 and the Fed, and we can see here that central banks around the world are not really coupled with this current move. So they're not injecting, they're slightly holding, if not taking away some of the market liquidity. And yields continue to move higher. So you can see here that actually we are completely ignoring yields, and I expect this to eventually break the market because, of course, 4.7% shows us higher for longer on the US 2-year. 10-year was also up, but this one here starting to get a bit of a problem. And just remember, the US 02Y versus US 10Y is a combo code that you'll want on the charts. We haven't mentioned it for a while, but you don't really need to freak out about markets properly until this thing uninverts. So until it gets underneath 1%, I wouldn't worry too much about like some kind of weird recession or anything like that. Just remember that's an important factor. As a lot of you in the comments correctly pointed out, junk bonds and bonds in general with our bonds indicator were not freaking out enough or at all really ahead of the NVIDIA earnings. High yield junk holding its own, considering that we're seeing yields going up. And if we have a look here at our bond indicator, it almost made a new high. So again, if bonds are sideways or up, and the market's going up, that's a tick. If bonds get crushed and the market's going up, big X. You need to be paying attention to bonds. Don't worry, we cover it here every day, so we'll be constantly talking about it if needed. What about copper? A great trade recently, one of our favorites, working very nicely, continuing to go up. I'd like to see copper break through the 3.95 to 4 ratio. And of course, we haven't seen that yet from copper, but we will be watching for it. The US dollar is very weird because it actually fell huge during the session, then regained itself to end up as a bullish hammer. Now, I've been looking at this with the euro as the proxy trade, and you can see here that we have quite a lot of supply over on the left-hand side with some interesting level breaks, especially the last previous daily high, which kind of sits around here at 104 for the dollar index. If the dollar does manage to break back up above here, it could start to really fly, as yields would probably be breaking past that 2-year 4.75 level. And all of this could be, a sign, certainly alerts to be set across the board. But dollar index getting very interesting. If we end up seeing a closure underneath this last wick, I think the US dollar is really going to get hit. Euro is probably going to start flying. But if we get that rally through this level, and you can see here the trend line even going down through it, there's a good chance that we're actually going to see a boost in US dollar trades. Currency traders would be very excited about that dollar chart. What about oil? So far, so good. It's held the zone, a bit slow. Like to see this through $80 so we can move towards our 82 to 84.50 target. But this is starting to look a little bit better here. It held the level of demand. It's basically got a higher highs and higher lows for now. And we're looking for this thing above 80. If it does happen, it's going to be good for energy, which we talked about before as a sector. And it's been lagging very, very hard. And of course, oil would be breaching that important basing structure. Also look at UK oil on the charts, which is Brent. And you can see here, very nice base structure as well, which is trying to break through again, series of higher highs and higher lows. It's so close, but it hasn't quite catalysted through. And I think that's going to be yields, dollar, and oil all at the same time if it's going to happen. It's going to be very interesting. Gold, we mentioned in the previous session that we thought it was weak around here. Most traded zone hit, weakness ensued. We're back in these levels. I guess it still has to be weakness around this level, specifically, especially if dollar does end up rising back up. Look, technically gold doesn't like yields up either, but it's becoming a bit of a stagflationary potential environment. So that's the only time that gold can trade weirdly. So I think at this stage, it's gold bearish until it breaches past this level up here, the most traded zone, and then it becomes bullish for at least those sessions. Day traders would be on that one quite heavily. What about Tesla? Disappointing, really. To be only up 1.36% on the session, it's not really great for this stock. I'd like to have seen it go through 200 and close. We know there's a massive call wall at 200 and that we'll probably switch into a fairly positive gamma style environment at that level and start to squeeze or at least move higher from the options perspective. We have not seen 200 breach yet with a closure. So unfortunately, we don't have momentum on Tesla's side, but the base remains good and it remains like a stock that looks like it could fly at any point, up multiple percentage points. I'd like to see it through 200 though fairly soon, as I'm sure Tesla bulls would. What about Nvidia? Well, this stock, that's wild. I got to say, I love witnessing history. Obviously, I get pretty passionate about markets because I've been doing this for a long time, but I love how we always see new things that are exciting. Now, if you said 16.4%, I probably would have believed you because I've seen a lot of these things before, but 16.4% is no joke. That almost $80 billion of market cap, that takes Nvidia now, just out of interest, to 1.94 trillion. So it might even be trying to get into the $2 trillion club in this rally. There are no signs of weakness yet. As we've reported several times, we had potentially buy the rumor, sell the fact. Obviously, it smashed the lights out. It sold into the earnings, regained pretty much all of that. So you can see here, then kept shooting up because, of course, it's getting forward earnings on it now in terms of what the expectations are. But this one will eventually end badly. Nvidia is well known to do this. If you've been trading it for a few years, it loves a good rally. It loves getting wild. And then it loves dumping a huge percentage of its stock. So if you actually go through some of the old history runs, 21 notably, a massive move, especially off the earnings, and then suddenly it all got collapsed. And what we're looking for is that collapse. And we do not have it yet on Nvidia, so it is all green, all good for now. Targets that people are going to be setting, well, of course, 800 is a fairly decent level for it. Once it got through 750, 800 becomes very likely. Then you go towards 900. Then you go towards the magical 1K, which a lot of people are reading into. There are no real weaknesses in this market at this stage. So it is a momentum-based trade, but it will end up getting incredibly wild. I would not be surprised at all over a 3-day period for Nvidia to drop 15% or more at one point soon. But we haven't seen it yet. So we'll continue to watch on the sidelines or in it if you're lucky enough to be an investor or you're trading it long. Options are expensive though. They're on about 93rd percentile or something, and probably even more. They're probably 100th percentile now when it comes to how expensive they are. Let's talk SMCI. So as we mentioned over on our X account, the scenarios were buy the dip or buy the dip in terms of generally what we see with similar scenarios. Now, because it rallied really not off itself, but it rallied off Nvidia, we probably have a bit of a false rally here, and there's a good chance that this will be a weakness period. Now, to go against something like this, because it's a guess, you're going to need to think about options. And obviously, you've got to practice your own risk management, do your own things. And as I mentioned often, patience, reaction, don't predict. There are replicable concepts within what it's actually done. It may seem mad, but the chances of the buy the dip was actually fairly good. And the chances of this being a problem zone between 975 and its previous high of 1076 is relatively high as well. So it's a very interesting zone, incredibly expensive options, and I'd be loving to see. I think this one's going to be just interesting to see how it plays out, and it's a wild one for people that are wild out there on markets, but be risk averse, guys. It's a very risky type of trade if you don't know what you're doing. What about the Magnificent 7, or as I should be calling it, Mag 6? New all-time highs, Nvidia obviously rallying this thing up, and it continues to hold the magical 20 daily moving average. So until that's taken out, it's all green, all good, I guess, on these markets. Speaking of all green, all good, the Chinese stock market continued to do well. As I was actually recording the previous session, we were breaching through 16.5. That obviously brought some nice momentum trades for it. A few people have been messaging me saying this has been pretty sweet. Yeah, it's no Nvidia in one day, but it is quite replicable and it's looking quite nice. And there's a lot of different combo codes for it. And obviously the data suggests that could continue to run into maybe like a 17,250 or even an 18K kind of level. This market has been beaten down. These are the first signs of decent recovery. I would like to see it through the weekly 20 moving average, which you can see here on the HSI. And there are, some okay signs there from price action standpoint. If you read the fundamentals, though, you're never going to like it. It looks absolutely shocking. But, the markets are down 80% for that reason. US 2K, what have we got here? Well, not much movement, actually. It wasn't a 2K-led market. And as we saw before, this tends to be a bit of a weakness period for the US 2K. I'm still bullish on the concept of the rest of the year for the 2K because it's so far behind the rest of the market and because it usually does play catch up if the economy truly is strengthening, which some stats say it is. Some say it's not. But yeah, we've got here basically an ascending higher highs and higher lows for now. And it's just kind of stuck in the middle of that range. So nothing too interesting there. Qs, big move up, obviously a huge rally. We're starting to get into that nosebleed territory for it. I'll report if we get some type of TD13 on this as well. That can be a turning point for markets. But again, it's just one read. We're in uncharted territory, almost at all-time highs. We need to get price action into the favor of course, the bears. And that's going to come back to the US 500 if you're looking at it. The S&P must get under the daily 20 moving average. We've mentioned it several times. It keeps coming here. This time it came here with a lower high, which actually did look ominous, but then Nvidia crushed it up. So at this point, it's just, each 50-point increment is kind of the next break zone. The trend is up at this stage, and to go against it, you're going to have to just use options and have your risk management in there. Usually a period of seasonal weakness comes through at this time, but we haven't seen proper breaks yet. So we'll be watching, and obviously we're continuing to run that kind of rally for now on the smaller timeframes. Let's move over to Bitcoin because it's trading much more like a normal market in some ways from the perspective of its weakening where we thought it should weaken. So this is exactly where we thought it should weaken. It hit into some big kind of resistance zones. And for now, it could be that this was the false break or the UT, which could be happening also on the stock market. Remember, if it gets crushed off this level, I think we're going to know a lot of information about what we want to see. But for now, bulls are in control. Bitcoin, you can see here, if it breaches underneath 50,700 and doesn't instantly reject back up, if it doesn't instantly reject back up very, very quick within that session, we're probably looking at a significant pullback for Bitcoin and therefore a pullback through the other coins. Ethereum is starting to get a little bit more of momentum behind it. So obviously it's moving through almost to the 3K level, which is a huge level for it. And if it does get through 3K, the next stop for Ethereum is actually about 3,500. So this is what we call an FBTC combo. This week's been absolutely all about Nvidia, but we will talk about Bitcoin and Ethereum and, of course, the links between them because crypto's been pretty good in 24 so far. And just a reminder again, if you enjoyed today's show, if you like what we're covering here, make sure to subscribe, guys. Sign up to the free weekly newsletter. We've got some banger content coming out soon. The Australian bird. But anyway, it's going to be very, very good, and I think you'll enjoy it. It's completely free. Links in the description down below. Thanks so much for watching. We'll see you in the next one, and bye for now.